Hey traders, happy Sunday. This is Ron Haight. Hope you guys are having a fantastic weekend. As always, everything in this presentation is for educational purposes only. There's a daily chart of the S&P ETF, the spiders using Thinkorswim. We finished the week higher than where we started. The bulls have the edge. This was the sell-off that we can see. This is the rally. Here we sit. As of Friday, we're challenging those June highs. The all-time highs remain the target. All we got to do, let's zoom in again. The close right here was what, 320, 320? We closed at 321. We're almost there. All we got to do is take out that little high on a closing basis, then the all-time high is the target. So the spiders is definitely bullish going into this week because we're above the red line, which is the 20-day exponential moving average. It's a nice trend trading moving average. And then the big one is the orange. That is the 50-day SMA, the 50-day institutional moving average. We get below that one, and that is what gives the bears the edge. Qs sitting up there almost at all-time highs. We did have that bearish engulfing on Monday that I covered in the midweek video. We haven't gotten back up there, but we're not even below the red line. So is there a little bit of caution? I suppose, but we're still above the red line. There hasn't been any follow through really to the downside from that bearish engulfing. What would it take to negate this bearish engulfing that occurred on Monday? We need to take out those, frankly, the highs of the candle. I would just want to blow through all of it, and that would negate it. As of right now, it's still in play. It's not all that good, but you know what? We're still above these moving averages. So bulls get the edge. We get below the red. That 20-day EMA, that's where I become more cautious, and then the target immediately becomes the 50-day. So bulls have the edge this week. Now, Netflix had earnings this past week, and if I zoom in here, this is a daily chart. Here was the incredible quick move from 446 to, just 120, 30 bucks higher in about 2 weeks. And now here we sit post-earnings. So this was the close before, the day before earnings. This was after earnings. And you can see we dropped, 34 bucks, 6.5%. Big whoop-de-doo. The stock's back to where it was a whopping 7-8 trading days ago. However, it's still above the 20-day EMA. So even though there was huge volume on Friday, we're above the 20-day. It hasn't even fractured one moving average. If it closes below the red line tomorrow, let's say, the target instantly becomes the orange. Now, from an educational perspective in a paper trading account, what I would be doing here if I had a protected put on Netflix, when I have puts for earnings reports and you get the gap down, well, that's great. It gapped down one day, but we don't know which way it's going to go yet. If we get a close lower on Monday or Tuesday, let's say, follow through puts it down at 450. That could be a quick 10% drop. If we end up closing higher on Monday, I could immediately start to say, you know what? I guess it was a one-day drop. So if I close higher on Monday with the stock, I could just exit those puts either end of day or maybe on Tuesday, and then maybe look to re-add them if we get back below the red line at that point. Because what they're going to do is they're going to keep sucking more and more implied volatility out of those put options. And they've already done that to a degree, even with the stock dropping, because it didn't get massacred. But it'll keep dropping here over the next couple days as well. Now, what to watch for this week? Let's talk about some different stocks. I got a question on Apple. Apple, Amazon, Google all report on July 30th. So when we get to that point, we'll talk about them. For this week, in bold are the ones we're going to cover in the video. These are just some maybe to keep an eye on, just from my point of view. We got IBM, we got Coke, we already heard from Delta, so United, American, Southwest that are going to be coming in. It's nothing really new. I'm curious to see if they have any different statements than the Delta CEO. Wednesday, Chipotle and Las Vegas Sands. And then Thursday, pool. People are stuck at home putting in pools, right? Well, how about homes with Pulte? So let's go take a look at some of these guys. But that's who to watch. Now, first off, IBM. The stock has a massive range, 158 back in February and then 90. And since it's rallied back up into the 120s or so, it really has gotten no traction. You can make an argument for a left shoulder here, a head here, right shoulder here. But what happens is when you have stocks that are range bound, to me, if this thing breaks, let's say 114, you can make an argument and say it's back down to lows. And if it takes out that close, 135.75, round it up to 136, then 158 is the target. Right now, this is all chop. Maybe earnings give us some clarity and decide which way it wants to go. How about Coke? 60, 36, got back up into the 40s, almost like IBM, and it's dead weight. Similar situation. If Coke closes below, let's say 43 bucks, we can make an argument and say 36 is the target. We close above that June 8th high around 50, then 60 is the target, potentially 20% higher. So maybe keep an eye on that one too. Chipotle. I don't know about you guys, but the drive-throughs around here sort of go like this. Chick-fil-A is backed up and it's wrapped onto the major highway. It's literally unsafe. It's crazy. And it's like that around the clock. Then you look across the street to Burger King. There's a couple. Panera, there's usually one or none. And then Wendy's actually is a little busy. Chipotle seems pretty busy, but it's nothing like a Chick-fil-A is. So I'll be curious if this is a localized thing or if Chipotle really is slammed countrywide. Right now, the stock's sitting at $1,100. I mean, it's crazy, right? Went from 9 to 450, 50% haircut, and now it's tripled. Really? Tripled? So let's see if those earnings back it up. Last time I had earnings was over here in April, and at that point it was around 800, and it's up, what, almost 40% since then. For a stock like this, puts are going to be incredibly expensive. So from a pure technical play, I mean, if I was owning stock, I always think puts are a good idea if it's money I can't afford to lose. But you could practice this one on paper too. At the money, 45, 60 days in time. From a pure trading perspective, we break below both the red and the orange. Think about this. We cracked the orange line. This was only a 2-day bottom. There's a little bit of support here. I'm just rounding this off, 870-ish. And then you start coming down to, there's a little gap here, but the other support's down at 6. Maybe after we get the earnings gap, if it's down, we can then look at downside targets, maybe consider bear call trade ideas, bear put trade ideas. If it breaks out to new highs, well, sky's the limit. Maybe burritos do fly. Las Vegas Sands. I'm hearing different reports from some of my friends who do like to travel. Some are back to traveling, most are not. And some are going to casinos and having some friends that just relay back because we talk and they know what I do. And apparently, from what I'm hearing, the casinos are not doing well at all, which is no shock. We'll get into that I covered it in another video. We won't get into it here. I'm really interested to hear how Las Vegas Sands is doing. It seems to have a lot of resistance up around 50 or so, 51. Then there was this, let's go ahead and zoom in here. Then there was the pop-up from basically right around that June 5th, June 8th time frame, that Friday, Monday. We get above 56, then there's a gap fill to 65 and back up towards the highs. But if we start taking out 43 and it does not look good, these are just spiked down lows. We can make an argument that this tweezer-type bottom in the mid-30s would be the target. Sort of like Coke and IBM, a lot of trading range. Let's just see if we get a breakout. I had a question on Tesla. Tesla's going to have earnings on Thursday after market close. I mean, your guess is as good as mine. This is sort of like a game of horseshoes or something, or blind darts. You throw and I'll throw and see who's right. Anything can happen. The stock is up $1,300 since March. It was at $400. There's reports that the company has not bad accounting, let's just say. And then others say that, sky's the limit. I have no idea what's going to happen. I'm not trading Tesla. For me, I like my capital. The folks that trade it short term and can make a lot of money short term, they often are the same ones that get whacked when it rolls over. How would I follow Tesla? It's sort of the same as I've been saying in the other videos when you guys ask me my thoughts. You got to go with something. Maybe the red, maybe the orange as potential stops. But look what happens when you start getting full candles outside the upper Bollinger Band. There's usually a reversion to the mean. It got inside a little bit, then we had a blow off top, and here we sit. I have no idea what's going to happen come Thursday with this earnings report, other than it probably will have some fireworks. How about Kimberly-Clark? Stock was at what, 140 something, 110. It gets right back up as quick as it went down, and now it's dead weight. This thing could potentially break out. If I bring in all the data on Kimberly-Clark, you can see we're at all-time highs. So let's go back and go to a 1-year daily. There was the all-time high. Let's zoom in. So I would put an alert around 150. We break out to 150, off we go. If we break below, and look how pretty this is, 134-ish, there's literally no support to 110. That's a straight shot of what, 20, 30%? How about pool? Everybody seems to be putting in a pool if you're staying home. 200, 160, now 290, here comes 300. Now, they don't report till Thursday. I think a lot of those are BMOs before market opens. It consolidated, started to look how pretty this is. Horizontal line starts to break out, and then it just quickly tacks on 20 points. The stock hasn't been below the red line since the last earnings report when it got above the orange all in the same day. So since this stock popped up to around 205, it's tacked on nearly 50%. That's pretty impressive. Stayed above it. So if we get below the red on a closing basis, might show that there's some profit taking coming in. Doesn't mean the end of the world, just says, hey, maybe folks are, as you get into the fall and the winter, unless you're in the southern part of the US, you're not going to be putting in pools once we get past October, November. So they're going to slow down a bit. We get below the orange line, that would be a major red flag. Now the catch to all this is it could go from here to here if the report is bad. I would expect the report to be amazing, but there's also a lot that's been priced in. Bottom line, if I had money in a particular stock that I couldn't afford to lose, protected puts are the only way to do it. Got to protect that capital. Pulte Homes, interest rates incredibly low, but with this lockdown, the benefits starting to end. Even if they pass something, the housing market's going to be a mess, is my best guess. However, you and I can have our opinions, right? But we take out these highs, which doesn't take much more on that earnings report. 47 is the target. Look how we've hit the 50-day, back tested the 50-day, back test the 50-day. If this thing has a negative reaction to the report, we get below the 50-day, target 27, 23, and you might as well say the lows at that point. UNP, just for basically transport, if it breaks above 188, 189, we're new highs. If it gets below the orange line, well, guess what? We have to go find other swing lows. And then American Express, just to see how the credit card industry is doing. I did see parts of JP Morgan's report saying that they're starting to see write-offs, and so are some other banks. Curious to see what American Express does. They definitely have some high-end cards, the Platinum card, and then some of the individual airline cards like the Delta. These things are, $550 a year a piece. Chase Sapphire, they put to $550. They're now giving $100 credits to Chase Sapphire, to Business Platinum, to Delta Reserve, different cards like that to keep folks from canceling. But if you can't travel, what's the point in having those cards? They're going to have to sweeten the deal. And if they give some inclinations that they're going to do that, it's going to hurt their earnings. So I'm curious to see what's going to happen to AXP. If we take out these highs, back up to 138. We're already back and forth below the 50 days. So for this one, we take out those lows, then we come back down to the bullish engulfing at 77. Personally, I'm more curious to hear just what they have to say about the state of the consumer and what they're now starting to see, even before the stimulus runs out. So that is it. I wish you guys a fantastic week ahead. I'll probably be doing a video on Wednesday. We'll go with a midweek update unless things start getting crazy. So take good care, enjoy the summer, and I'll see you next time.